I see further downside in Bitcoin. I think that the stock market is going to make new lows this year. And again, that's saying something because we've had a huge bounce on the S&P.
Hey guys, welcome back to the channel. Today we have Gareth Soloway forecasting Bitcoin's next move, as well as his take on the economy. Soloway has seen that inflation is so high, no one can stop it. But on the other hand, if inflation decreases, but the unemployment rate goes up, money would start being printed again. Soloway says there is no good endgame in the market. Everything will only destroy the economy in the long term. Soloway says that investors need to be aware that there will be a massive reset where the dollar will collapse. He says that charts always tell the truth because all they show is data, while all media is filled with bias. Let's listen to this interview with Gareth Soloway as he gives his investment advice before the next collapse and predicts Bitcoin's next step. Don't forget to like and subscribe if you enjoy what we do here on this channel. Let's get right into the video.
So what we saw is Friday when the equity market sold off, you got this nasty candle. It did close below this channel. So look at the beauty of this channel here, how we've been hovering up and down inside of it really since June. But the negative here is that we saw a close below. Now you haven't confirmed, but as far as I'm concerned, this is a very, very nasty little pattern formation. And it's likely we're gonna go retest this yellow trend line here, which happens to be the high from 2017 right here. That's going to be a big line in the sand. If we break that, then you see that move down that I've been calling for as my secondary target. You know, my first target was 20,000. We talked about it last year in Dubai when I was there in October 2021. We said 20,000. Now I say it's going to actually go lower than that. Next stop is going to be 12 to 13,000. So we are headed lower, and it's going to be a rough road along the ways here. You know, from the drop from 69 to 21 and change, if it's only got another really about 9,000 to go, that's not that crazy. I agree. I'm a big long-term bull. I'm just a shorter-term macro economist looking at the cycles and everything like that. So the beauty of 12 to 13,000, it gets us to that 80 to 85% correction that Bitcoin has done every single cycle. So that kind of gives us a basis of what to look for. It's also a strong technical support. But you're right. I mean, if you're a long-term investor and you're not going to look at it for 10 years or 5 years, there's nothing wrong with that. You just have to, this is the key, right? You have to be able to weather the emotional storm, because I know a lot of investors out there, they might buy in at 22 or 21, and when they're down 40% at 12, they might panic and unload because you're going to hear a lot of negativity out there. And if you have to be able to control that and shut it out, and then you're okay to do that. But if you're someone who's very emotional and you're going to exit the trade at that point, and then it goes to 50,000, then 100,000, that's not a good scenario for you to be in. So if you have emotional control, that's fine. Start inching in. I also advocate for dollar cost averaging. Buy a little here at 21, buy a little bit more at 18, buy some more at 15 and so forth, versus just going all in at one specific level.
Soloway says that since the opening pierce of the 2017 highs, he has seen Bitcoin's price increase, then decrease, and finally go sideways. Soloway believes that in the short term, we will keep seeing this type of action. Soloway says later this year, when everything comes to a head, there will be a giant risk reduction, which will cause Bitcoin to drop because the market will become a risk-off environment.
I don't think so, not at this stage of Bitcoin's life cycle. I think down the line, you will see a kind of a difference and Bitcoin and the crypto market start to emerge. But right now it is tied to a risk asset. I know a lot of people said in 2021, oh, it has nothing to do with the stock market. It'll go up when inflation goes up and the markets sell off. We obviously learned that that wasn't the case. So I'm in the camp that we're going to see crypto sell off with the stock market. I have a big downside move coming later this year in the stock market, and that's going to be the catalyst to really take us to that 12, 13,000 marker on Bitcoin. And I actually think that Ethereum is very likely going to head down to this next target around $645. So I have it priced in. That should be the level that Ethereum hits when Bitcoin hits 12 to 13,000.
How did you come up with that yellow line?
Key major support. It was the beginning of the big bull market. This would be 100% retrace to the start of that bull market. Major support right here as well. There might be a lot of hype around the merge that could drive it higher, but I'm not necessarily anticipating that, but you have to calculate that into your kind of your risk assessment when you're looking at Ethereum here. I mean, you can see over here when we broke lower, we came back just shy of the 200 right there. So it is possible, just like Bitcoin, like if we go to the Bitcoin chart, you can see here, we haven't even come close to the 200 on Bitcoin, which is kind of sad to think, right? I mean, it hasn't even come close at all, but you can see right here, it did hit the 200 before that next cycle to the downside. The problem here on the Bitcoin chart is that this was a very defined bearish pattern and now you're below it. So that is problematic. Now, again, we have to hold this 19.6, 19.5 level, which is that key level from 2017. Otherwise, again, we should be heading very, very quickly. And again, just watch the stock market. I strongly encourage everyone to just keep an eye on the stock market. That is going to be your indicator. If this continues and we continue to see this fall on the S&P, I don't believe that the crypto markets can withstand that. This is again a fear of the Fed not loose or not backing off. We got the minutes last week from the Federal Reserve meeting. That kind of was the end of the move. Right into those minutes or when we touched the 200 moving average, which was the technical resistance level. And then as soon as we heard from the Fed, it didn't seem as they were as dovish as the market wanted. And we've seen the dollar just soar here. Take a look at the DXY chart. Let me punch that in here. And we've seen the dollar basically up to a double top up here. But look at the run on the dollar basically since that move from the Fed or since the minutes came out. And that is putting major pressure. The stock market does not like a strong dollar. It wants a stable or slightly weaker dollar. And that again is problematic here for the market. So as long as the dollar is going higher, it's telling you that again, investors are moving away from stocks. And that's why we're seeing the selling that we're seeing. So if you sell in terms of yen or euros, and then you convert it back, right? So you're taking in yen or euros, and between that period of the conversion back into dollars, the dollar strengthens, so you're actually getting less out of it. And we've seen even stocks like IBM, companies like IBM, they took a $3 billion hit because of the currency issues here. So it's kind of wacky how that's working right now, but it is definitely a headwind. And I think it's important to understand, what does a strong dollar mean? It means people are going into the US dollar for safety. And what they're doing here is they're saying, all right, the Fed is going to drive us into recession. And therefore, and they're not lightening up, even though we know the economy is weakening per economic data. And so they're hiding in the dollar. They're selling risk assets that might be affected by a weaker economy. And that, again, is a kind of an issue that the markets are very freaked out about right now. I see further downside in Bitcoin. I think that the stock market is going to make new lows this year. And again, that's saying something because we've had a huge bounce on the S&P. So by end of year, I'm actually saying that we will take out these lows down here at around 3,600 on the S&P, 3,500. And we actually should go even lower than that. So it's going to get nasty towards the end of the year as the economy or as investors start to recognize that the Fed is not going to come to the rescue of a recession. I think the next jobs number is going to be a lot weaker. We're going to start to see that weakness filtering into the jobs number, which is a kind of a delayed reaction as we know economically. And that is going to make the markets very, very scared with inflation not coming down even more. I'll even make a bolder call for you today. I say that the stock market has made the highs of 2021. We will not take those highs out for 5 to 10 years.
Soloway says to remember that crypto is not an isolated space, so you need to stay informed on what the Fed is doing. It's also important to watch the price of the dollar and even to stay on top of the stock markets. As Jerome Powell's attitude during his press conference was very peaceable and said hiking is done, this will mean more money in the system, which is positive for Bitcoin because more money will be able to be invested into it. Soloway is worried because Bitcoin is still a leg down and we're going through inflation and recession. Also, there have been uncanny similarities between the crash of the dot-com bubble and Bitcoin today, which, worst case scenario, will lead to a complete washout of the entire crypto space. What do you guys think about Gareth Soloway's predictions for Bitcoin's future? Let us know in the comments below. Thank you so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.